All right, today we're going to pull back the curtain on the secret that has been quietly powering the entire global economy for the last 50 years. It's called the petrodollar system. It's a fascinating story about oil, about money, and about a single handshake that literally changed the world. Let's dive in. So let's just kick things off with a huge question, one you might not have ever really stopped to think about. We all use dollars, we see them everywhere, but what actually gives the US dollar its immense global power? What is truly standing behind it? Now, if your first thought is gold, hey, that's what most people would say. It makes sense. But that's actually not been the case for a very, very long time. Since the early 1970s, the dollar has had zero connection to gold.
Yeah, the real answer, it's way more fascinating. For 5 decades, the dollar's dominance has been propped up by the single most essential commodity on the planet, oil. And get this, a secret handshake agreement that tied them together.
Okay, so to really get how this all happened, we've got to jump in our time machine and go all the way back to the early 1970s. It was a time of serious crisis for the US and for its currency. So here's the backstory. After World War II, the whole global financial system was built on the US dollar being pegged to gold at a fixed rate. But by the late 60s, the US was spending a ton of money on the Vietnam War and massive social programs. It was printing way more dollars than it actually had gold in its vaults. So on August 15, 1971, President Nixon basically had to rip off the Band-Aid. He completely severed the link between the dollar and gold. They called it the Nixon shock. And just like that, the dollar was floating free, with no anchor at all.
And you cannot overstate how big a deal this was. The US was staring down the barrel of losing what's called its exorbitant privilege, which is just a fancy way of saying the incredible power to basically print the world's reserve currency. It needed a new anchor for the dollar, and it needed one yesterday. And believe it or not, that new anchor showed up in the middle of all the chaos of the 1973 oil crisis. The crisis itself actually created the perfect storm for a pretty brilliant and history-changing solution. And this, right here, is the absolute heart of the whole system. In 1974, the US and Saudi Arabia struck a deal. It was a classic quid pro quo. The Saudis promised to price all of their oil exports exclusively in US dollars. And this part is key. They also agreed to plow all their extra profits right back into buying US government bonds. In return, the US promised them complete and total military protection for the kingdom. And this idea, it spread like wildfire. This wasn't just a deal between two countries for very long. By 1975, the entirety of OPEC was on board with this model. All of a sudden, if you're a country that needed to buy oil, and let's be honest, that was basically every country on Earth, you had to buy US dollars first. This created a massive, constant, built-in demand for American currency. But look, making everyone buy oil in dollars, that was only half the magic trick. The other half, the part that was maybe even more genius, was what happened to all that cash after the oil was sold. This is where we get into something called petrodollar recycling. It's a really simple idea, but its impact is just enormous. Think about it. Oil-producing nations were suddenly drowning in cash, way more money than they could possibly spend at home. So what did they do with it? They sent those billions flowing right back into the United States. It was a perfect closed loop of money. So where exactly did this river of money flow? Well, a huge slice of it went into buying US Treasury bonds, which basically meant they were financing America's debt. Another giant chunk was poured into what are called sovereign wealth funds, these massive state-run investment funds that bought up everything from US stocks to real estate, and of course, a whole lot of it was spent buying, you guessed it, American weapons and military gear. And just so you know, this isn't some dusty old history. This is happening right now. To give you a sense of the scale, as of late 2024, Saudi Arabia's official holdings of U.S. Treasury debt were still at a staggering $143.9 billion. That is a huge ongoing stake in the U.S. economy. Now, this system created something much bigger than just an economic arrangement. It forged this incredibly powerful feedback loop, tying the dollar's financial muscle directly to America's military and geopolitical might. It's what some experts call the military financial nexus, and it works like this. The U.S. acts as the world's policeman, providing security. When things get chaotic anywhere in the world, investors get scared and run for safety. And where do they go? To U.S. assets. This flood of money drives up demand for the dollar, which in turn lets the U.S. borrow money more cheaply to finance its giant military.
It's a perfect circle of power that gives the US incredible leverage on the world stage. And then there's the plumbing, the nuts and bolts of the system. Because oil is priced in dollars, pretty much every major transaction has to pass through US-based clearing systems like chips and Fedwire. This gives the US Treasury an unbelievable superpower, the ability to see, block, and sanction financial transactions anywhere on the planet. It's how the dollar can be used as a weapon. Okay, so that brings us right up to today, and to this massive debate you're probably hearing a lot about, de-dollarization. It's a hot topic for sure. But there's a lot of hype and misinformation out there, so let's try to separate the facts from the fiction. You might even seen the story go viral in mid-2024, the one that claims some 50-year petrodollar treaty had just expired. Let me be clear, that was 100% myth. As we've just talked about, this deal was always a series of informal understandings, not some formal treaty with a countdown clock. But the fact that the rumor spread so fast tells you just how anxious people are about the dollar's future. So what are the real threats we should be watching? Well, first, there's all this chatter about a petro-yuan. For now, its impact is pretty moderate. Lots of headlines, but very little oil is actually being traded in it. The things that are truly critical are, 1, America's own massive and growing budget deficits, which really chip away at long-term confidence. And 2, brand new technology like something called mBridge, which is now a working prototype and could, in theory, let countries bypass the dollar system completely. And you really have to see the numbers to grasp the scale of this shift. China is now Saudi Arabia's #1 trading partner. We're talking over $107 billion in trade. This isn't just business. It's a deep economic bond that is completely rewriting the strategic map of the Middle East. And here's where the technology really comes into play. Saudi Arabia has officially joined a project called mBridge. Now, what is that? It's a platform for central bank digital currencies. In plain English, it's a new set of financial rails that could, for the very first time, let countries trade huge amounts of oil without ever touching a US dollar or any part of the American financial system. So, does all this mean the dollar is about to collapse tomorrow? Well, not so fast. There is this really powerful idea in economics called hysteresis. The best way to think about it is inertia. The system is sticky. The dollar is so tangled up in everything, from international contracts to foreign reserves to global debt, that just ripping it out would cause absolute chaos. It would be incredibly painful for everyone, even for the countries that want an alternative. And that brings us to the real takeaway here. For most countries, the goal isn't to bring down the dollar. It's not about destruction, it's about construction. They're trying to build parallel systems. Think of them as financial lifeboats that give them options and protect them from US sanctions and financial pressure. And so that leaves us with the final big picture question. We probably aren't hurtling toward a world without the dollar, but we are absolutely moving toward a world with more financial choices. The real question is, in a world full of these new financial lifeboats, who's still going to choose to sail on the old flagship? And who's going to decide it's time to chart their own course?